The world's best known cryptocurrency is hitting its highest levels in nearly 3 years, with investors flocking to Bitcoin as pandemic driven volatility permeates the stock market. The renewed consumer interest and continued mainstream adoption of digital currencies has Wall Street taking another look at Bitcoin. But will its value continue to rise, or are we just seeing another short lived peak for crypto? Joining me to discuss this and more is Zach Prince. He's the CEO and founder of BlockFi, one of the major players in the crypto lending sector. So, Zach, let's start with the big news first. Your company just announced a partnership with Visa for a Bitcoin rewards card. Can you talk a little bit about that product and why it's a step forward for crypto?
We're really excited about the Bitcoin Rewards credit card news. We launched the waiting list earlier this week. The way it works is it's a normal rewards credit card, but instead of earning airline miles or cash back, the rewards currency is Bitcoin. So folks that use the card will earn Bitcoin based on every transaction that they're making with the card. That Bitcoin will flow straight into their BlockFi account where they can do the other things that we have available on our platform, including earning interest on it, trading it, getting a loan secured by their cryptocurrency portfolio. And notably, and part of why I think it got so much attention, this is the first ever credit card in the crypto ecosystem and the first ever credit card with Bitcoin rewards.
I think so much too when it comes to cryptocurrency and Bitcoin that one of the big barriers has been kind of this lack of understanding by consumers. So, how do you see this changing? And, what is the opportunity looking like in the retail market?
Absolutely. So, folks who are already interested in Bitcoin are obviously super excited about this product. But we also think that it's going to be a really easy way for people who are crypto curious to get some Bitcoin in a really low risk and kind of familiar construct that everyone's familiar with now. Notably, we're offering a $250 in Bitcoin sign up bonus after you spend your first $3,000 on the card. And so it's a really easy way to get some Bitcoin without having to figure out anything new whatsoever. Yes, we think it'll be a fantastic path for our aunts and uncles and parents who aren't as digitally native as the younger generation and familiar with cryptocurrency.
Looking at the overall market, Bitcoin has had a phenomenal year. It's rallied triple digits, it's hit record highs recently. What do you feel like is behind this surge, and how does this stack up against the 2017 surge? Do you see any similarities or differences there?
Yeah, sure. So there's a ton of momentum building up for Bitcoin and other assets in the cryptocurrency ecosystem. And the biggest things driving that activity and that momentum are the macroeconomic backdrop and the infrastructure in this asset class that makes it more accessible to folks. So, on the macroeconomic backdrop point, obviously we have this global pandemic. It's making everything digital much more relevant and it's making it more relevant faster than it was before. And then additionally, we have record levels of fiscal stimulus, stoking fears or anticipation of inflation. Bitcoin is increasingly seen as a store of value. A lot of folks call it digital gold, and so it's doing very well. Additionally, the industry has made big strides in terms of infrastructure and ways that institutional or retail investors can access and invest in these assets. So firms like Fidelity, PayPal, Square, Robinhood, and others making Bitcoin and other crypto assets available on the platform are the biggest things that are driving the price action that we've seen recently, and that's fundamentally different than 2017.
Right. And do you think this price action is a little bit more stable this time around?
Absolutely, and the data, shows that. So Bitcoin now is less volatile than all of the major FANG stocks for the last 4 months. Um, there are so many things that exist in this ecosystem that we didn't have back in 2017, whether that's the derivatives market or the smartest institutional investors in the world coming out and explaining why they are starting to allocate to Bitcoin in research letters, investment banks starting to provide support to cryptocurrency companies or put out price targets and coverage on the asset class. So there's just so much more here than there was in 2017. As a result, the liquidity profile has improved. the volatility profile has improved, and the prices are staying at these levels close to their all-time highs for sustained periods of time now. Whereas back in 2017, it really was a very, especially at the end there when we were getting close to 20K, rapid run up and rapid decline right back down.
Hey everyone, thanks so much for watching Investors Business Daily on YouTube. If you want to watch more videos, make sure you hit that subscribe button so you don't miss a thing.